Where will Bitcoin head after the price convergence? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Currently, with a KYC deposit of $100, you'll instantly receive a Bitcoin contract position worth $1,000. How does it work? All you need to do is click on the link below, complete the KYC, and make a deposit of $100. After that, you can choose whether you want a long or short position for the Bitcoin contract worth $1,000. This means that if the market moves in the direction you choose by 10%, your funds will double. Your $100 will become $200. If your position incurs losses or if you get a margin closeout, it's not a problem. You can withdraw the funds you deposited as well. Now, let's get back to the Bitcoin market. Looking at the daily chart, we can see the recent downward movement, which is somewhat strong. The continuity of the decline is acceptable but not overly strong. In a strong trend, the trading volume must surpass the previous ones. But that's clearly not the case here. In a strong trend, the candlesticks would also be longer, and they will be in a continuous movement. However, in the current situation, the candlesticks are shorter and the trading volume is moderate. If we compare it to the subsequent consolidation phase, it can be considered part of the downward movement. There are two possibilities. It's either a continuation of the downward trend, in which it will continue falling after that, or a reversal pattern. However, based on the current situation, it's more likely to be a continuation of the downtrend. Why do I say so? Let's switch to a smaller time frame, like the 4-hour chart, to examine it further. We can observe that the current pattern is gradually converging. It's converging. The previous volatility has reduced, and the highs and lows are converging gradually. The price range is also narrowing, and there are multiple touch points on both the upper and lower sides. At least 3. As you can see, 3 touch points on both sides. This triangular convergence pattern is highly effective. If there were only 1 or 2 contact points on the boundaries, it might not be as reliable. But in this case, it is definitely effective. Now let's examine this. When we encounter a small convergence pattern, how do we make judgments? We can observe the following. Well, before it reaches the upper boundary, it touches the lower boundary again. As you can see in the previous movement, it followed a relatively consistent and obvious pattern. At the current position, it touched the lower boundary, experienced a rebound, but quickly fell back. So, based on the current situation, the bearish trend is relatively stronger. However, we need to wait for a confirmed breakout. False breakouts are quite common. When determining a true or false breakout, trading volume is a crucial factor. If we take a downward scenario as an example, considering that the current market is indeed more bearish, if it breaks downward, we need to see a significant increase in trading volume. However, having a high trading volume alone is often not enough. To confirm a genuine downside breakout, we usually look for a long candlestick that covers a considerable distance. Otherwise, it is highly likely to be a fake out. And volume is important. Both factors need to be satisfied for greater effectiveness. If there is high volume, but the price decline is only slight, it may not be very effective. Similarly, if we have a large candlestick indicating a substantial price decline, but there is no significant increase in trading volume, it is not reliable either. Ideally, both volume and the distance covered by the candlestick should be substantial for us to consider it highly probable, or at least very likely, to be a true breakout. Now let's take another look at the current market situation. As we've mentioned many times before, the price is now under a line that used to be a support level. You can see that the position played the role of support and held the price twice before a downside breakout. After the downside breakout, we have seen an oscillation with a small amplitude in this area. This kind of pattern is typically considered a continuation pattern. This means it serves as a consolidation phase within an existing trend. How should I put this? For example, if we had a bullish trend before, a small and narrow oscillation within it usually indicates a continuation of the upward movement. Vice versa, if we had a downtrend and a box pattern with a narrow range of price oscillation, it often suggests a continuation of the downward movement. There have been several clear examples of this pattern in the past. Let's take a recent example for comparison. A recent one. We can see this is a significant downward movement. You might argue that the oscillation range isn't small. but it is relatively small compared to the entire downward trend. In cases where there is a significant oscillation following a downtrend, then it becomes more challenging to determine the outcome, because the magnitude of this oscillation is relatively large compared to its decline. However, in situations like the one we observed, where there is a prolonged and deep downward movement, followed by a tight oscillation, it is reasonable to expect a continuation of the downtrend. As you can see, this specific scenario resembles the previous price action, where a decline was followed by a tight oscillation in a box pattern, indicating a continuation of the downward movement. It's important to note that during this oscillation phase, there should not be a significant increase in trading volume, as the primary focus is on the upcoming trend. It's hard to take advantage of a choppy market, especially in trading contracts. Therefore, we need to be very cautious in this position. If it moves downward, personally, I'll take a position. Now let's take a look at the CME gaps. In the case of CME, there are no gaps left. Although there are no gaps, there was market activity over the weekend. When it initially moved upward, we should not chase after it. Based on the market, when the price moved a little upward, many people considered entering the market. However, from the CME chart, it returns to its original position, which means that the volatility during the holiday period is meaningless. Ethereum also exhibits similar characteristics. We can observe that it formed a tight and irregular box-shaped pattern in this area, which is typically a continuation pattern. Okay. Moreover, the volume remains average during the oscillation phase. It is not characterized by a sudden surge in volume during the continuation. Otherwise, it would indicate a different scenario. All right. Thank you. You're welcome. To like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.